Okay, good afternoon, everyone. Today we're going to continue our discussion on uh, linear regression. So we started last time modeling Apple returns, regressing it to SPY returns. This approximates what we call the CAPM, although that's not really the CAPM yet, but that we're going to do today because we're looking at the behavior of your asset relative to the market. And the result of our regression, let me, yeah, this is the result here. That's intercept 0.003552, although it's not statistically significant. Okay, and then SPY returns 1.89 or 1.9. So the slope, okay, the slope of our model class is 1.89 or 1.189 or 1.19. So this tells us that for every 1% increase in the market, which is proxied by SPY returns, you have a 1.19% increase in your Apple returns. So we see here that Apple returns is very sensitive to the market. It's volatile. When the market increases, the Apple returns increases by a bigger percentage. Okay, or when the market goes down, the Apple returns will go down by a bigger amount. Okay, and we said that if you take a look at this is just a simple linear regression because you only have one predictor, SPY returns, and the multiple R squared is 62.81. This tells us that 62% of the variation of our dependent variable Apple returns, which is what we're trying to model, 62% of the variation of Apple returns can be explained by our model SPY returns. So that in a nutshell is what that means. And last time we looked at, we just proved that the R squared is 62.81 by looking at SST, SSR, and SSE. Just by way of review, SST is simply the total sum of the squares. So if you take a look at that formula, y sub I minus y bar, we are technically not using SPY returns here because we're just comparing the actual value of your Apple returns with the average Apple returns. This is y bar. This is the average of the Apple returns. And then we get the difference between each of the returns minus the average, and then we get square it. After getting the square, we sum it up, and then we get the total sum of the squares. The regression sum of the squares is where we seek to improve on our base model. The base model is just the mean. Here, we create a model, an LM model class. Diba? Ito y hat to eh. Y hat stands for predicted value. And the predicted value is that we use the beta null and the beta 1, the regression model, in order to predict our y sub I. And then the predicted value, we compare it with the base model, which is y bar. Okay, and then square it, and then sum it up to get the regression sum of the squares or sum of the squares of regression. And then the error is the one which we cannot explain. So we just compare the actual value minus the predicted value, square it, and then sum it up. Okay, so this one is your explained variation. This one is your unexplained variation. And the total sum of the squares of the total variation is equal to the explained and the unexplained. So if we're going to get the proportion of this, if we're going to divide this by the total variation. Okay, we also divide this by the total variation, SST. So we have here SST over SST, that's 1 or 100%. So this is equal to SSR over SST, and then plus SSE over SST. So this one, class, is your R squared. It is the proportion of your total variance, total variability of your dependent variable, which can be explained by our regression. Okay, and we know this is 62.81% given in the 62.81% given in the regression output. Therefore, this should be around 37.19 approximately. 67% cannot, sorry, this is 62, therefore 37% is this one. Okay, this is the variation that cannot be explained by our model. Okay, so which means that if we need to increase this, if we want to increase the coefficient of determination, then we have to maybe increase the variables. Okay, because we're only using the SPY returns. Okay, and we were able to show this, class, that indeed, okay, we were able to show that indeed SSR over SST is 62.81%. Okay, so let's leave that and go now to our CAPM. Okay, here. All right, capital asset pricing model. So let me just share with you some, please copy this in your RMD. You copy it one at a time. Okay, I'm not sure if I share this with you, but if I have already done that, then that's okay. Maybe this one. Control C. And lastly, this one. Okay, please copy those, class. Okay, let's go here. Capital asset pricing model. May I have a show of hands, class, if you have encountered this concept before in your previous finance subjects? I'm pretty sure you have, class. Even in financial management, that's discussed. Capital asset pricing model. Kindly, please. Yes, okay, good. How about the others? All right. Okay, so I assume, class, that you have discussed that in your prior subjects. Now let's just have a quick review. So for CAPM, we're using a model in order to describe the relationship between the expected return and risk of an asset. So this is in fact a risk return model. So if you take a look at the expected risk of an asset, sorry, not risk, returns, okay? The expected return of an asset is equal to the risk-free rate plus your beta. This is actually a measure of your risk. And then the expected return of the market minus your risk-free rate. If we rearrange this, we'll get this one. Returns of the asset minus risk-free rate is equal to a certain constant plus returns of the market minus the risk-free rate times your beta, and then plus epsilons of I. This is actually the excess returns because we're subtracting the returns of the asset uh, to the return of to the risk-free rate. Okay, and same thing, this is the excess return of the market. So this reduces class into a regression model. Okay, this is the dependent variable, this is the independent variable, these are your parameters and your residual. Okay, so what we're going to do now is we're going to use this model in order to predict the slope or the sensitivity of your asset relative to the sensitivity of the excess returns of your asset relative to your market. So we're just using one factor here. We're just using the market in order to explain or to model our asset. So we're going to use okay, here I made some notes here. Regarding your beta here, if your beta is greater than 1, let's say 1.5, then that indicates that your asset is more volatile than the market. Because this means that for every 1% increase in the market, then your asset increases by 1.5%. Okay, so it's sensitive to the movements of the market. It tends to move 1.5 times as much as the market. Typically, these are betas with higher than 1. Okay. These are usually tech stocks or growth stocks. For example, yung mga tech stocks natin, Microsoft and Tesla. Okay. There are many tech stocks. No? If the model tells us that beta is equal to 1, then that means that it moves with the market. The market goes up by 2%, then your asset will go up by 2%. Okay, it mimics the market. It moves in line with the market. Now, some assets will display a beta, a slope less than 1. So then that means, class, that unlike the beta which is greater than 1, this is betas that are less than 1 are less volatile than the market. So for example, the market moves up by 1%, then that asset moves only by 0.5. If the beta is 0.3, then that means that the asset moves by only 0.3%. So it's less sensitive to the market. And typically, these are assets that are defensive. It's like utilities, consumer staples. And we have assets that are equal to, whose betas are equal to 0. So what does that mean? They are uncorrelated with the market. For example, if you plot the risk-free rate, okay, you'll find out that it's a horizontal line. So it's not related to the market at all. And there are those whose betas are negative. So what does that stand for? Okay, they move opposite the market. So these stocks are used for hedging to protect your portfolio. So you have assets whose betas are negative, which means that when the market is going down, then you have an asset that's going up, and vice versa. So it's used for put options. Okay, gold, for example, is touted to be a safe haven, which means that its beta is negative in some periods. Okay, when the stock market goes down, then gold prices go up. So it's called a safe haven. So it's used for hedging, protecting your portfolios. Okay, so we're going to use, as you know, we're going to use, I think I gave this to you already, no? Did I include this, class? Yeah, I gave this to you. So what our goal, class, is this. Let's begin with the end in mind. Our goal is to create an object where we have apple, excess returns. Okay, because we need to perform the formula that your R sub I minus R sub F, right, is equal to your alpha plus your beta times R sub M minus R sub F. Okay, so this one will be your excess returns. This is your excess market returns. So if we have this, okay, then we can now perform regression so that we can look for the alpha, beta null, and the beta one, because that's our goal, to determine how sensitive is our asset to the market. Okay, so what's the RF that we're going to use? We're dealing with US stocks. So what we need is here debt treasury bill number 3 months. So we're going to download from Fred, okay, the treasury bill, and let's use the same date from 2020 0101 to 2024 12/31. Auto dot assign is equal to true. Okay, so let's access this data first. So let's run this get symbols, and it will generate a DTB3. That's debt treasury bill, okay, coming from Fred. Here you go. Okay, so let's see. Let's print this one. Okay, I have it here already. Okay, this one, class. And notice that there are NAs. NA here, NA here. So walang trading nung January 1. And here there are also some NAs. Okay, let me pause for a while, and we're able to get class DTB3. Kindly please chat in the chat box if you were able to get DTB3. Treasury bills, class. Okay, thank you, Jerry Lane. Okay, how about the others? Yeah, good, good. All right, very good. So what will this be for, class? It will be your risk-free rate. So we will subtract our Apple returns to this risk-free rate and subtract our SPY returns to this risk-free rate, so that we will be really following the CAPM model, because as we said a while ago, the CAPM model requires that we model the excess returns and not just the returns. All right. So if you recall, as we have, okay, this first class. Now, the data that you get here for DTB3, this is annual data. Okay, remember when you're given rates, no? Treasury bill rates, they are annual rates. Okay, but since we're using daily data, then we will have to convert this. Okay, so take a look at this conversion. Risk-free rate daily, okay, it's equal to our annual data rate. Then we make it percentage, because this is in 0.11. This is not. We make it in percentage, class. Divide by 100, and then divided by 252 in order to convert it into percentage daily data. Okay, decimal, I mean. This is a percentage, we'll make it decimal. Okay, so if you run this, class, control enter, then we now have a risk-free rate daily. Now take note that the risk-free rate daily is an XTS object. Why is that so? Because we're getting it from DTB3, which is an XTS object. Remember, we're getting this from using quant mode. Okay, DTB3 here, XS object. So XS object, we divide it by 100, we divide it by 250, then the result is also an XS object, risk-free daily. Okay, and then if we check this, risk-free daily, I have it here. Okay, there you go. So we already converted this class into daily rates na to, class. No? Daily rates. We need this in order to make it jive or consistent with our daily returns. Daily rates ng R sub F, daily returns ng Apple at saka SPY. Okay. Now, let's change the column name is not, let's change it. DTB3, let's just make it RF, no? RF.rate. So column name ng risk-free rate daily is RF rate. So we're changing the column name. From DTB3, we'll make it risk-free rate. Okay, let's run this. And you can now see that risk-free rate daily is now, the column name is now RF.rate. Okay. And we have viewed this a while ago. Let's now check, class, how many NA values there are here. Okay, because taking a look at this, okay, there are many NAs. Okay, let's check how many NAs we have. So sum is that NA of our object. So we have 54 NAs. Okay, so quite a lot, 54 NAs. Okay, so remember that with let's begin with the end in mind. What we are interested in is to create an object where you have Apple excess returns, SPY excess returns, okay, and your risk-free rate. Okay, your risk-free rate class we're going to use in order to generate your excess returns, because your excess returns will be equal to your daily rate minus your daily risk-free rate. That's the excess. Okay, so now let's go back. We used last time an object called combined returns. So let's take a look at that, class. Kindly check your combined returns. Still there? I hope you didn't. I hope you didn't remove that. Combined returns. Let me just print this. Okay, here you go. You have Apple returns and SPY returns. 1256 observations. Okay, 2 columns. These are the log returns that we computed last time. Remember, using return.calculate or calculate returns. Okay, and then we remove the NAs. 1256 observations. Okay, what we're going to do now is we're going to, okay, where's my number 3? We're going to merge, class, combined returns, okay, the one that I just showed a while ago, and then risk-free rate daily. Now take note, risk-free rate daily has 1305 observations, while the other one, okay, that combined returns has 1256. So they will not match. They will not match. So how do we make them match? Here, we include all is equal to false. So all is equal to false will only include in your data set that you're creating, in the object that you're creating, those that are, okay, since we have here, class, diba? This is an XS object. So may mga dates tayo dito. Also combined returns with Apple returns and SPY returns class. It's also an XTS object. So what will happen is that it will only compare those that are present in both. So for example, itong 200101, 2020-0101. This will not be included because see combined returns does not have this. Okay, let me just show you combined returns again. Show it to you there, class. It has no 2020-0101. Therefore, yung sa, okay, balik na naman ako. Number 3. Okay, dun sa risk-free rate daily, meron siyang 2020 0101. Therefore, this will not be included. Okay? So is this the best way to go? Kasi marami i-delete dito eh. Not necessarily. Okay? If you because what we can do is pwede nating yung mga NAs dito class, okay? It's possible to make it, kasi tinan nyo, pwedeng i-last observation carried forward natin. Okay, so this is 1305, okay, of which 54 are missing. Diba? Yung isa naman, 1256. Hindi nagmamatch sa mga dates dito. So pwede class, yung mga dates dito, okay, ilalagay din natin dun sa combined returns, tapos pwede tayo mag-create ng LOCF. Okay, but we'll reserve that for the future. As of now, we'll just use this easy way out. Yung mga common lang sa kanila ang ilalagay natin. So let's create this merge. You have this XS object combined returns. This also is an XS object. Then only include those that are, okay, that's all is equal to false means do not include everything. Include only those that are common to both. Okay. For purposes of just tinan nyo class, gawin natin true to. All is equal to true. What will happen? If I run this class, and let's take a look at CAPM data here. Here, CAPM data. What do we have? We have 1247. All is equal to true. So, hindi rin niya class ginawa kasi walang malalagay ng mga values dun sa NA. Alright? So if ito naman class, in this instance, all is equal to true. I'll run this. CAPM data. Okay. 1256, no? 1256. So only those that are common to both. All right, then if we check class, how many missing values do we have for CAPM data? Control Enter. We have 9 missing values, no? CAPM data. So what we're going to do is we're going to make sure that we remove these NA values. And then run this again kung may NA pa. So no more NAs because we omitted those missing values. Okay, let me pause for a while, class, and then entertain questions. Or if you're able to follow, class, please feedback. Yes na lang. Okay, thank you. Thank you, Therese. Thank you, Katrina. Okay, Sophia, let's wait for the others. Okay, good. Right, good. Okay. Okay, let me continue. I hope the others are able to follow. Okay, because I'm not getting any 50%. You're so many class, 35. And I'm only getting 8 responses. That's a very poor response rate. So I hope to get more than 20 responses next time. All right, so what do we do now, class? Okay, thank you. What do we do now? Again, the objective is to create a data frame. Now, I want to underscore the fact that we need to create a data frame and not an XS object. Why? Because when we use LM class, it can only take on data frames. It cannot take on XS objects. Okay, so let's come up with a process by which Okay. So for this one, I'd like you to be the one to type this class. Okay. You type this. So we're creating this object, Apple access returns. Apple access returns. And what's this class? Di ba yung CAPM data natin, it's an XCS object. Okay, let me just flash that again. CAPM data, we have three assets here, Apple returns, SPY returns, RF returns. What we're going to do is we're going to subtract Apple returns to RF returns, RF rate. So Apple returns minus RF rate, that will be your excess, Apple excess returns. Same thing, SPY returns minus RF rate, that will be your excess SPY returns. Okay, so if you take a look at this, we have to make it numeric class. Okay, numeric so that it becomes a vector. Kasi ito class, this is an XTS object minus an XTS object. If you don't make it numeric, it will also become an XTS. We don't need an XTS now. What we need is a numeric vector. Okay, so let's run this Apple excess returns, which is just the difference between Apple returns minus RF. Ganun din si SPY class, SPY returns minus RF. Okay, and we're calling it Apple excess returns and SPY excess returns. Okay, I'll give you a few seconds to control enter class. Apple excess returns, if you check that class, it will be not in data, but rather in in values. Yan, Apple excess returns. So it's a vector, no? It's a vector. Wala siyang rows, columns, ano lang siya, isang array ng mga numbers ng returns ng Apple minus risk-free rate. Okay, kindly chat please class if you were able to generate yung Apple excess and SPY excess. Were you able to generate this? Okay, good. A few more seconds for the others to follow. Okay, all right. So thank you so much. The improvement kanina 6 lang o ano, ngayon 10 na. So I hope maabot tayo ng 50% or more. Okay, so what are we going to do now? Remember, this is a vector class. No? This is a vector. These are no longer XTS objects. So we're going to create this object CAPM regression DF, and we're going to use data.frame. We're going to create a data frame class. Why is that so? Because we need it for the LM function. Ano i-create natin? Apple.access will be the column name is equal to Apple access returns. Ito yan, class. So, and then SPY.access is equal to SPY access returns. So these objects that we created, we're going to put it in a data frame. Okay? Dalawang columns. Yung unang column, Apple.access. Yung pangalawang column, SPY.access. Okay? So I'm going to, and then print natin, control enter. I'm going to give you a few seconds class to create this data frame and check nyo class kung ano laman itong CAPM regression DF. So it's a data frame consisting of two assets, okay, Apple access and SPY access. That's why I said you print column names ng CAPM regression DF. And indeed, it's Apple access and SPY access. Okay, once again, I'm going to wait for you to give me feedback if you're able to already generate that data frame. Okay, good. Then let's check is that NA. We always check class kung may ano kung may CAPM, the underscore regression, DF. let's check class if there's an NA value. Kasi hindi mag-work yan sa LM class pag may mga NA tayo. So every now and then you check, sum is .NA, CAPM regression DF. Okay, so wala, no? None. Walang NA, so this is of no consequence. Hindi na natin kailangan to. Yung NA.omit. Kasi wala naman yun. Check natin kung may NA siya. Sum is .NA. Okay. Okay. Now, let me discuss something first here. Okay, ano ba yung XS object natin? Let's take a look. Ito class, yung combined returns, di ba XS object yan? Okay, so let me just print head combined returns. And then first three observations. Combined returns class is an XS object. Ito yung combination ng apple at saka spy returns. There. Okay. There's one characteristic of an XS object. It's actually composed of two parts. Ito yung core data niya. Ito yung index niya. We know that this is the index. This one, the non-index is called your core data. And we can extract this. Pwede natin makuha to. No? So, let me see. Ang tawag na class, we call it core data. Here. Core data from the zoo package. Open parenthesis. Combined returns. And then I'll get the here. Kukunin natin head. Yung first, kahit yung first three elements niya. Okay, here I'm using head to get the core data class ito. Core data ng combined returns. Okay, again, this is your combined returns class, di ba? Okay, if I get the core data, okay, dagdagan ko na lang. Make it first 5 observations. Control Enter. Let's run this. Okay, you can see now, what do we have? These are your apple returns and spy returns, yung first 5 observations. So yung core data class gives us what's inside your XS object. Okay. Arrow up. And then on the other hand, if I use index, kasi sabi ko, di ba, dalawang parts. Core data, yung actual data niya, index class, yung month, yung ano niya, yung date object. Okay, 1, 2, 1, 2. I'll run this, Control Enter. And I get here the first 5 observations, 2020, 0103, 0106, etc. So this is what an XS object contains, yung core data niya at saka yung index. Okay. Now, what we did a while ago, class, ito. Okay. Ito, no? Okay. Saan yan? Okay, here class, diba? Here. Okay, let's see camp data class. Our CAPM data, sorry. CAPM data, I'm going to view it. CAPM data. Here. And wait. Tapos na to, no? Okay, I'm sorry. We already did this. Ito na pala. This is what I'm interested in. CAPM regression DF. If we check our environment, CAPM regression DF here. Okay. It's not an XS object, diba? 1247 observations of 2 variables. If I click this, there. 1247 observations. So what do we have now? We have now Apple XS at saka Spy XS. And this is what we need, class. Number one, it's a data frame. Number two, it contains our Apple excess returns and our predictors, pi excess returns. So we're now ready, class, to do our CAPM. Mag-LM na tayo. But there's another way to do this, class. Okay. So let me just share this. I will not run this anymore, but I'm going to show you. Okay, Control C. Show you, class. Okay. So this one. Now, what did I do here? I created this XTS object. How did I create it? I just subtracted Apple returns and Apple and RF rate. Notice I did not put here as that numeric. So this is still XTS, this is still XTS. And then here I created an object CAPM regression DF1 data frame, and then apple.xs is equal to, take note of this, class. I'm getting just the core data. Okay, core data, it means that it will not include the index. Core data of this one. This is an XS object. This is an XS object. If I get the core data of both of them, then it will only return the elements, this one, class. Okay, so if you run this, class, you'll get the same answer. Okay, so two ways to do it. Here, we immediately created a vector as that numeric and then created the data frame. Here, we first preserve the XS object and then use the core data. Okay, core data function. You'll get the same answer. All right, so let's go here now. Okay, I want you to write this. It's very simple. CAPM model, capital asset pricing model, is equal to LM. Yes. LM. So it's Apple excess. This is your dependent variable regressed on Apple excess, SPY excess. This is what we want, class, right? This will generate a regression model where you have your intercept, you have your beta 1, and the beta 1 is SPY excess. Data is CAPM regression DF, and then let's summarize here. Okay, there you go, class. Okay, so this is our model. We're regressing Apple excess on SPY excess. And the result is a regression model where you have the intercept, this one, and then you have the SPY excess returns. So what does this tell us? Same thing, your intercept is not significant, okay? And your SPY.excess is 1.86. In the other case, it's 1.89. So it's pretty close, class. However, this is the more quote-unquote correct beta. Because in the first one that we did, it's just Apple returns and SPY returns. It's not the excess returns. This one is your Apple excess returns and your SPY excess returns. Okay, and we are here. The object that we're creating is your CAPM regression. Sorry, it's your CAPM model. If I view CAPM model, it's a list. Yes, remember? Okay, it's a list. All right. May I please let me pause for a while and ask you if you were able to generate the CAPM model? Okay, thank you, Katrina. Okay, how about the others? I hope you were able to generate that. Okay, good. Now let's do a little change here. Okay, let's create an object for this. Let's call it let's just call it some summary, no? Some model. I'll just create the summary model. Okay, run this. And it will also create an object called summary model, which is also a list. Okay. There you go. Summary model class. Take a look at the coefficients. Iba class yung coefficients dito sa CAPM model. Yung coefficients dito class sa CAPM model, yung intercept lang at saka yung SPY excess. Dito, yung summary natin class ng model natin. Take a look at the coefficients here. Okay. Let's print this. Okay. The residuals and daming residuals. Okay. Alright, hindi nakita dito. Yung coefficients class 2 by 4. Why is the coefficients 2 by 4 here? Why is it 2 by 4 here? Okay, why is the coefficients 2 by 4 class? Because our regression model class siya. Where's that? Oops. Nasaan na yun? Here. Wala. I'll print this also. Control C. Here, class. Iba't yun yung coefficients natin, class. 1, 2, 3, 4. 2 rows by 4 columns. So ito, class. So these elements here are not found in your CAPM model, but are found in your sum model, class. Okay, I hope you got that distinction, class. Because that's very important when you're, for example, when you want to get the coefficients, madali lang, no? Kasi ito yung CAPM model natin, CAPM underscore model, right? Dollar. Okay, coefficients, diba? Coefficients, and if you want just to get the, ano ba yung coefficients? The intercept, no? If you notice, intercept is written with open parentheses, no? Intercept, close. If I run this, may error ba ako? Dapat ba may ano? There, sorry. I forgot the quotes, no? So dapat may quotes. Okay, and you can, of course, intercept. Gusto natin yung ito. Same spy dot ipsos. So it's subsetting, di ba? Kung kinukuha natin yung spy excess, ito siya. Yes. 1.3, 1.86. Okay. Now, if I want to get, for example, yung dito sa ano, sa, is that, here, class, itong estimate, itong standard error, itong t-value, itong probability, how do I do that, class? You cannot get that from your CAPM model. You can only get that from your summary model. Okay, so see sum model, a dollar. Okay, you can see here, class, no? Coefficients there. So nasa coefficients tayo. Then brackets. So gusto ko yung sa spy.xs, and then comma. Okay? So gusto ko yung sa t-value. Quotes. Kasi nasa SPY coefficients, SPY excess, and then t-value. T space value. Exactly how it's written here. No? Okay, so if I run this class, and 46.0012, exactly the same. So you can extract values here. So depende class, if you're accessing cap some model, okay, you can access these things. On the other hand, ito naman yung CAPM model natin. There are some elements in a regression output that you can access via cap this object, no? Sabi ko nga dito class, di ba, wala dito sa coefficients, dalawa lang to. You don't find here the probability, you don't find the estimate, okay? That can be found in your sum model here. Ito coefficients 2/4. Okay, so why am I doing this class? Because I want to bilis ng oras. Okay. All right. So we have it here now. I'll just share this class so that we can cover more materials kasi again limited naman tayo ng time. Okay. So here class, we're just printing yung results. No? I'm creating this object called beta of apple, which is the function is coefficients, CAPM model class, and then SPY excess. But we can get SPY excess from the CAPM model. We can also use pwedeng CAPM model, dollar, coefficients, and then SPY excess. Or we can use the function coef, coefficients. Then we get also the intercept. Then we print it class. Ito yung title natin, dash, CAPM, beta and alpha for apple. Then close in dash. And then concatenate natin, apple beta sensitivity to SPY, 4 decimal places, and then i-print beta apple. Si beta apple ito class, which is the coefficient of SPY excess. And ganun din to class kay alpha apple. So if I run this, it will just print class, okay, CAPM beta and alpha for apple. Ito yan class. And then apple beta, sensitivity to SPY, colon, a 4 decimal places, %.4f / n, quotes again, 1.1865. Ito yung class. And the other one is alpha, 0.003106 decimal places. Okay, so we can see here class that the ang learning natin dito is that the apple stock is sensitive to the market, relative to the market. A 1% increase in the market will yield a 1.1865% increase in the apple returns, excess returns. Now take note, it's the value is quite different kasi yung minimeasure natin kanina apple returns. Ito apple excess returns, which is what the CAPM model is all about. Okay? Okay, ito ganun din, just checking the significance. Anyway, additional learning to. Okay, kinuha lang natin class yung p-value. Okay. So yung p-value class, diba? Summary, CAPM, or you could have used sum underscore model, yung name ng object na to. You can replace this, no? Sum underscore model. Okay, that's the object which we created. Sum underscore model, and then coefficients, then the intercept, comma, and then the p-value. This is what I told you about. Control enter. So that will create now our p-value, and dito siya. Alpha p-value ito, 0.366. And also, we print alpha p-value, 4 decimal places, alpha p-value, and then include, if alpha p-value is less than 0.05, then alpha is statistically significant, otherwise it's statistically insignificant. So print this. Okay, we have the printout of the alpha p-value and also the whether it's significant or not. Okay, so let's take a look at this one. I'm going to, once again, I'll have to share this with you class in the interest of time. Control C, Control V. Now, what we're going to do now is to replicate what we did a while ago. We're going to compute also for the beta and the alpha, but this time using the package Performance Analytics. For Performance Analytics, for us to use it for CAPM beta and CAPM alpha, we have to input the asset excess returns, Tony, sorry. It should be excess returns. Kindly correct na lang. And this is your benchmark or market excess returns. And then your risk-free rate. Now, it should be XCS object class. Hindi pa pwedeng data frame. So remember a while ago, we created this Apple excess returns XCS. And these are all XCS objects. Okay, pati itong SPY excess returns. XCS object din yan. So we can use this. But here, I'm just shortening the name class. Kasi ang haba ng pangalan, ginawa ko lang Apple XTS Exes. And then SPY XTS Exes class. It's the same as this one. Okay, so let's run this. Okay, so meron na tayong Apple XTS Exes, which is also an XTS object. Double check natin. Here. Apple XTS Exes. Okay, let me pause for a while, class, and okay, check on you, class, if you're able to follow. Baka some of you might have questions. I might be going too fast. You notice I can now accelerate a bit kasi medyo yung familiarity niyo with R has now been enhanced. Okay, your mastery has increased tremendously, hopefully. Feedback, please, class. Okay, good. Good, thank you. Thank you so much, class, for your participation. Okay, now let's do this. Okay, to share or not to share? Hindi, gawin nyo na lang, class, no? So we're creating this object CAPM beta performance analytics. So this is just to denote we'd like to compute beta from performance analytics, and the function is CAPM beta. And then we define what's R sub A. R sub A is our Apple XTS Exes. RB is our SPY XTS Exes. And your risk-free rate is CAPM. So this is from your CAPM data where we have the RF rate. So even if they're coming from different XTS objects, it's okay. Okay, for as long as they're XTS objects. And once you do this, class, just copy, paste, and then just replace this with alpha, and then CAPM.alpha. So this will compute your beta, which we expect to be 1.186 something, and this one is your alpha. And then I'll just share this. This is just printing the result. Concatenate. Okay, this is your title. I'll just share that, class. But you have to type this one. And once you're done, class, kindly chat and tell me what result did you get. Did you also get 0.3336? Is that the one? And then 1.186 something. And then print natin. Title, CAPM beta and alpha for Apple from Performance Analytics. And then here, Apple beta, 4 decimal places. CAPM beta, Apple alpha, 6 decimal places. It should print your alpha and your beta. So do you have it, class? Did you get the same value? 1.1865 for decimal places. And then 0.00310 for Apple Alpha. I'll wait for your feedback, class, if you are able to get it. Okay, good. So close to yours. Okay. Yeah, it's okay. Off by a few decimal points. Kasi I think si CAPM that model, class, nagtatrancate siya eh. Okay. Yung syntax niya, class, I think nagtatanggal siya ng ng decimal places. Saan na yun? Ay, sorry. Zero. And then same thing here, class. P-value. Ay, sorry. Okay. This is your regression model, class. This is your performance analytics. Where am I? Nalito na ako. Ito. Here. So you should be getting this, class, 1.867 and 00329. Okay, ito yung rinan ko. This is for CAPM. Okay. So I think what I posted a while ago was the LM model. And you can see here, class, that see class, si CAPM beta, this is just a vector. If you take a look at your environment, you'll notice that it's under values. Nasa values siya. And isang value lang yan, class. So 1867 lang si CAPM beta, PA. The other one is 0.00329. So, okay, so what's the point there, class? I just wanted to show you that performance analytics can also compute for the alpha and the beta. However, yun lang makukuha mo dun. Okay, but if you're using LM, di ba marami tayong makukuhang insights, maraming information. Okay, so between for example, you're just in a quick hurry to just compute the alpha and the beta. Well, hindi pa rin, class, kasi just by simple LM, makukompute naman natin yung coefficients. So it was just meant to show you that performance analytics can also compute for the alpha and beta, only that what it will give you is a vector. Okay, so are we clear on this, class, so far? Any questions about CAPM? So we were able to generate the CAPM, a model using LM and using the performance analytics. Now take note, class, asan yung CAPM model natin, that the value of beta here, asan na si natin, CAPM model here, class. Okay. Yung value ng beta natin kanina, class, wait, hindi. So these are the fitted values, ano? Okay. Yeah. What I was trying to say was that yung Apple returns natin, class, yung excess returns, hindi lang iisang value yun, diba? Every observation will have its own fitted value, Apple excess. Okay, so per day, it's changing depending on the value of your SPY excess returns. And of course, as generated by your model. Okay, So any questions so far about our LM class, about our CAPM? No questions? Okay, thank you, Katrina. About the others? No questions? Okay, good. All right, may I invite you now to create a new RMD file class? Mag-create na lang kayo ng new file. Okay, tapos siguro i-title nyo Fama French. So we're now going to Fama French. 3-factor and 5-factor. Okay, may I have a show of hands, please? Paki-chat nga. If you discussed yung concept ng Fama French in your previous subjects, Fama French 3-factor and 5-factor models. Okay. Did you discuss this in any of your subjects? Okay, no? Okay, good. So opportunity to learn to class, no? Okay, how about the others? Okay, good. So opportunity to learn, and in the context of R, what makes this very, really powerful? Kasi minsan dinidiscuss yung Fama French, theoretical lang, no? Tapos walang computation. Ito class, magko-compute tayo. And this is the beauty of R. Okay, so please create now a new RMD file. Okay. And let me close this. Dami nang naka-open. Okay. All right. So, I'm sorry, not pwede new RMD file, or actually pwede sanang pwede kayo mag-create ng new project if you want, no? Pero sige, okay lang muna, no? Later on na lang yun. So for this one, you can create a new RMD file. And then, okay, first things first, baka kasi mag-time. Now, if you need to leave later on, of course, same thing, 5:45, you may just step out of the classroom. I'll just extend a little bit lang, no? Kasi 9 minutes, 10 minutes lang tayo, baka kapusin ako. I just want to make sure that we discuss this. Okay, Fama French class. Fama French. Now, before we download anything, I just want to ask, no? Okay, what we did with CAPM was, just write it, di ba yung we were modeling excess returns ng assets natin is equal to yung Jensen's alpha plus yung slope natin ni market excess market, no? Okay, so this is our CAPM. Now, of course, this is limited, simple linear regression lang. So Fama and French said that there are many other factors that can affect the returns of an asset. Depende yan. So they mentioned of certain factors. Okay, so can you please tell me, paki-chat class, ano kaya yung mga factors na to? Hanap nyo sa internet class. What are the factors that they were talking of? Check nyo nga class, Fama French, and then paki-chat please. What were these factors that they were talking about? Okay, size of companies, Katrina, size of companies and value factor. May ano sila doon, ano, may acronym sila doon. It's what? What class? Small minus large, no? So that's the size of the company. Small minus large. So they created a factor, an index, where they subtracted yung returns ng small companies minus the large capitalized companies. So that's your SML. And then they also have yung high market value minus the large market value. Yun ang HML class, yung in-general lane. Okay, market factor yun. So you have also yung excess market, no? Yung kanina natin. And then you have SML and you have HML. Ano yung SML class? Small cap minus large cap, and then high market capitalization minus your low market capitalization. This three class constitutes your 3-factor model. So we're going to make use of this, and we're going to predict, plus we're going to model our assets. We're going to use several assets, no? However, class, meron pa silang dinagdag to generate the 5-factor model. Ano pa yung dalawang factors ang dinagdag nila? Paki-chat, please. There were two more factors that they included, that they generated. What were they, class? Kasi ito 3-factor lang to. Ano yung 5-factor? Ano yung kasama, class? Okay? Yung 5-factor, class, itong tatlong to plus what? Conservative. So what was the acronym for that? Bago mag-conservative, ano muna? R. Yan. Ano yung R plus? Robust minus what? Come on, get it, class, para alam nyo, no? Para next time pag diniscussion natin to, and I'll require you to do some reading on this. Itong FAMA French na to, especially this technically 4 factors kasi isa naman market minus risk-free rate. Okay, robust minus weak, that's correct. And then may isa pa, class. What's the other one? C. M. Ano yung CMA? Conservative minus what? Class? Okay, conservative, aggressive. So we have 4 factors there, class, including a market, excess market. Okay? S, yung gitna, class, na notice yung panay M kasi panay minus yan eh. Small minus large. Okay? High value minus low value. Okay? Robust minus weak. Conservative minus aggressive. These are 4 factors, class. And good thing, class, is we can get that from the internet. Okay. So kindly go here to this site. I'll share this with you. I-download na natin, class, para next meeting dire-diretso na tayo. Okay? Paki-copy, class, yung nasa chat box. Okay. Let's go there, class. Okay. And then you will be led here, class. Okay, FAMA French. Okay, please find out what's the meaning of CRSP. Okay. And then you can see here the first row. This is your FAMA French 3 factors. This is your excess market. This is your small, okay, minus big. This is your high market value minus the low market value. Meron din dito sa ilalim yung 5 class, no? 5 factors. So we have here the latest value as of July 2025, the last 3 months, and then the last 12 months. So what we're going to do is scroll down, class, and then you can find here, class, FAMA French, 3 factors, FAMA French, 5 factors, 2 by 3. What we're going to download is the 5 factors. Kasi, class, yung 3 factors, it's in the 5 factors already. Now you have daily, class. I'll leave you as an exercise to download your daily para practice. We're going to use monthly, class, kasi monthly naman talaga yung paggamit nito. Pag daily, masyadong noisy. Okay? So, click CSV. I-save nyo, class, sa R project nyo. Okay, make sure you save it in your R project, which should be the default kasi you're working in your R project, no? Save nyo siya, class, and then mag-save na isang zip file. And then i-extract nyo, class. Pag i-extract nyo, class, it will lead you to a CSV file. Tapos yung CSV file na yun, class, what you do is to copy it and delete it, and then remove it from the folder, yung sa extracted na zip folder, and then paste it here sa main R project natin. Okay? I'm not going to do that anymore kasi ginawa ko na siya. And I have that, cancel. So you should have this data, class, sa ano nyo, This is my art project, and you should have this data class. FF research data, 5 factors 2 by 3. Okay, if you open that class, you'll have this here. Ito class, no? Yan. Okay, we will load this into our next meeting, and then we'll just clean this via R. So you have your excess market, your SMB, your high minus low, okay, your robust, your conservative, your risk-free rate, and then here your dates class, 1630701. We'll do a lot of cleaning on this next time. Okay, now, again, class, it's almost time. I'll just share with you another thing, class. What we're going to perform, class, yung ano natin, yung FAMA French, which is just regression, multiple linear regression. This will be the assets that we're going to download. I'll end here, class. Here. Control C. Next time na natin tong quant mode na to. Okay. Chat. These were, okay, pinunpick ko siya, class, kasi Control X, kaso ba? All right. So let's take a look at this class. I'm choosing some assets, class, that are sensitive to SMB, yung iba sensitive to HML, para makita natin, class, yung mga differences nila. So the first one is sensitive to yung small cap ETFs to. So this is a collection of small cap assets, no? And this should be sensitive to the SMB, yung S minus big. So expected to have high SMB, yung size exposure should be positive. We expect that. And possibly different value, profitability dun sa HML. Okay. Second, ito naman si IWF, iShares, 1,000 growth rates. So we will, sa growth, makikita natin, class, sa HML to, no? Okay. Sector naman, class, sa value din to, sa profitability, etc., 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 no? So I purposely chose these assets. May individual stock din ako na pinila, si Tesla. Okay. All right. And then an international ETF. So why did I choose this? What makes an asset interesting for the FAMA French model? Okay, number one, non-market beta siya. Ibig sabihin nito, yung market minus risk-free rate, medyo hindi siya malapit sa 1. Kasi pag malapit kay 1 yun, ibig sabihin, parang minimimic lang niya yung yung market, no? And then significant yung SMB, HML, RMW, and CMA exposures. So they tilt medyo nakaano siya sa small or nasa low low capitalization or robust or weak, conservative or aggressive. Okay? And also active management. Ibig sabihin yung Johnson's alpha niya, okay, is significant. Okay. So let me pause for a while, class, and okay, stop recording.